Dobar dan. That means good day. TalkcastPDX on the web at talkcastPDX.com. Name of the show is the Bogdanich Perspective. It's Tuesday, February 8th, 2022. I'm your host, Paul Bogdanich. Welcome. It's episode number 47. Going to call it juked. It's an interesting word, Juked. In the context that I learned it, it was reviewing financial statements, and they used to say they juked the numbers, which meant that they didn't convey a true impression or were otherwise manipulated. Looked at the dictionary, and it's an old Scottish word. It means to turn or bend quickly to avoid someone or something, so that would be a juke. And that's one meaning. And then to make, I can't even read my own writing here. To make a show move to mislead an opponent is what's called juked. But in the context that I learned it in, it was in terms of numbers. I would say, before going much further, I'm part of TalkcastPDX. TalkcastPDX has lifestyle shows, marijuana shows, cooking shows, etc. I broadcast on their network. I have to be careful what I'm saying, so I'm going to continue doing that this week. Also, let's look at some of the numbers. I mentioned last week that in a press conference last week that the Biden spokesman, that woman Pataski, was talking down the jobs print, which was supposed to come out. And I said Thursday of last week. It came out Friday morning. But, the report that was supposed to come out later in the week, and that was the jobs report for the month of January. And it's the initial. And they released the report on Friday, and instead of being a negative print, it was 467,000 jobs created, according to the print. The other headline numbers, or the unemployment rate, went up from 3.9 to 4.0%, but it had been going down on no jobs created, so who knows. Average hourly work week went from 34.7 hours to 34.5, and the average hourly wage went up to $31.63 from a revised $31.40. On the last report, it was $31.23, but or $31.32, excuse me, and they revised it up 8 cents to $31.40, and then this month another 23 cents to $31.63. If you can put up graph number 1, please. But back to juked. The reason that all those numbers posted so high, 467,000 jobs, etc., was they did a number of revisions. And you should be looking at the revisions. Is this screen? No, it's not. There's a delay. No, it's not on the show. Anyway, sorry, working out a technical difficulty here, but you can see from this chart what they did was, so they adjusted the numbers, and they adjusted the numbers all the way back to 2017, with the biggest revisions happening in 2019. And on the top up there is the current report, and under adjusted is what they reported to get the 467,000 jobs created for the month. And food service, 108.2, professional and technical, 45.5, and so on down the list. A lot of good job creation. But the unadjusted column over there is what the numbers were before seasonal and other adjustments. And as you can see, there's huge disparities in between the adjusted numbers and the unadjusted numbers. There's 78 major economists at different banks and brokerage firms and insurance concerns and everybody else that tracks these numbers and publish public estimates. And the largest of the 78 private estimates before the report came out was at 225,000 jobs created. That was the most bullish number, and it came in over twice that. The lowest number that I saw was Goldman Sachs at 250,000 jobs lost, and it's 4 times that. But 78 economists trying to predict this number, nobody got even within 50% of the number because of the magnitude of the adjustments. If you when you have something like this happen, it makes things difficult because you can't do year-on-year comparison. It just makes things very difficult. And if you go down to that column below, you can see in January they reported 233,000 jobs. Now they say it should have been 520, and so on down that list. And they created on their revisions, and they say that they did it according to the census to update this for the census information. They added 217,000 jobs to last year, taking away from whatever that is, March, April, May, June, and July, and adding to all the other months with almost 400,000 job adjustments in both November and December. But of more interest is the column over there to the left, and that is the actual number of people employed, right? You'd think that they could do that relatively cleanly. But they subtracted from the number of people employed a net 211,000. And it all shows that's a cumulative number, so it shows up in December. But they reported 149.16 million, and they revised that down to 148.95 million, so that's 211,000 lost. And of more interest is way down there on the bottom, which is total employment, pre-pandemic and where we are now. Pre-pandemic, 158.8 million jobs, and as of this last adjusted report, 149 million jobs, call it, so down roughly 9.85 million jobs from the end of January of 2022 to December 2019. So we still haven't reached, or not even really anywhere close to pre-pandemic employment. And then they messed with the monthly numbers. You can take that down, and it made historical comparisons difficult to the point of you would have to do very careful analysis to come up with any kind of historical parallel anymore. And that was the jobs report. I would point out once again, 78 private economists try and figure this thing out in advance, looking at all the source data plus whatever confirmatory data they use. Speaking of confirmatory data, last week I said that Tesla reported earnings, and somebody after the earnings said, "Hey, wait a minute, your earnings said you sold this many cars in Australia, but we went and checked the vehicle registration numbers, and there weren't that many cars, there weren't that many Teslas registered in Australia." And this week there was a piece, Tesla said, "Oh yeah, we guess we overstated that number." In other words, back to our word of the day, juked, right? But 78 economists tried to predict this number. The highest prediction out of all 78 was 225,000 jobs. Lowest was minus 250,000 jobs, and it came in at 467, which is more than double the prediction of the most bullish economist. Happened on Friday, right? Okay. This is the Wall Street Journal article that's your fact set, huh? All revisions. They revised everything according to the census, and who knows whether they were accurate and it's a big academic debate. You would have to have conferences where they attended and the private economists attended and hashed out the numbers, and we'll get that in 3 or 4 months, but not today. But how did the Wall Street Journal report all that? and this is on Saturday, quote, U.S. employers hired at a rapid pace last year and in January, bolstering the economy in the face of the Omicron wave of COVID-19 and staffing shortages. So, first paragraph, all about Omicron, right? The U.S. economy added 467,000 jobs in January, the Labor Department said Friday. Job growth in November and December combined was 700,000 jobs higher than previously reported. Overall, the robust job gains this winter signal that hiring demand continued to be high as Delta and Omicron cases surged. So, your second paragraph had a mention of Delta and Omicron. We're seeing more resilient, more prepared U.S. labor market than we've seen in the past. That's a quote, said Becky, somebody from Manpower Group. Now, Manpower Group is a temporary staffing agency. All right. So these guys couldn't even go to one of the 78 economists to get a quote. All right. Because if they went to one of the 78 economists to get a quote, the quote would be, we don't know what we're looking at. It's going to take 3 months to figure this out. So they didn't get a quote from them. They went to a staffing department and got a hold of the PR lady, and that's their quote. That one didn't have anything about Omicron. Next paragraph, U.S. stocks were generally higher and government bond yields rose sharply after the better-than-expected report. And this is the next paragraph. January payrolls might have been stronger if not for the surge in Omicron cases, et cetera, et cetera. And then if you go on to read the article, about 7 out of 10 paragraphs tries to relate it to Omicron and Delta. Nobody goes through the revisions. Nobody mentions that the revisions are 2.8 million jobs more than the unadjusted numbers. Nobody mentions that to get back to pre-pandemic levels of employment, it's whatever it was, 9.85 million more jobs, and so on. And that was the press coverage of that event. I would point out again that none of it matters because you can just print the money, right? Normally that would be a big deal, right? Because the president would call in whoever and say, hey, wait a minute, you told me employment was going to be this and turned out to be that. And in my spending plan over here, I counted on this much revenue based on your prior statement, and now you're telling me that it's going to be this instead, and somebody would be in trouble. But under our current system, they don't even care. They just, increase the speed of the printing press, if you will. And nobody gets, disciplined, held to account, or fired. They basically said that, oh, yeah, this is the number for this week. And, those numbers from 2019, yeah, they were all wrong. That was their answer. And as you can see, that's how it's reported in the press. They did the same thing out of the Department of Defense based on a medical study that was submitted to a congressman that showed increases in the rates of certain illnesses amongst the troops. And they asked the DOD for a explanation. And they wrote him a letter back, said, oh, yeah, the historical baselines are all junk. There's no increase. What you're seeing is an illusion. And that is accepted at face value without any articles in the paper. Interesting things, to read this thing, and this is today's Wall Street Journal. I glanced at it at breakfast, and there's a number of things in here, but most, front page above the fold, the leading article, they have a picture of this Russian. Apparently, she just turned 16 years old, phenomenal skater, won, ice dancing or something like that, but she was the first woman to land a quad in Olympic competition. Her name is Kamia Valiviva, I guess, or something, but again, tremendous skater, 16 years old, but they have her picture here. And then this is a list of all the articles in the paper, which shows up in every issue. And the lead story is this one. And that lead story, U.S. says invasion of Ukraine by Russia would halt pipeline. And the pipeline is what they call Nord Stream 2, which goes under the Baltic Sea from Russia to Germany and would bypass Ukraine. They already have an operating Nord Stream 1. They're trying to build a Nord Stream 2. And it's been a political potato forever, since the Trump administration. But if you read this, President Biden said the Russian-built Nord Stream 2 gas pipeline to Germany would be suspended if Russia invades Ukraine, and the German chancellor offering support, but without explicitly saying the project would be halted, is their headline. And then they go on to talk about, how Biden said this and Biden said that. And if you read the paper from front to back, that was on page A1 above the fold, right? Your lead story. If you go all the way to B10, page B10, right? So not in the lead section, not, one of the last pages I think it is the last page in the second section of today's paper. And this is just a stock article. This is the way they work. They have stock articles, but they publish it. And the headline is, Europe weans itself off Russian gas. That's the headline. But then they give statistics and total energy demand for natural gas. This is Europe-wide, not specific to Germany or any country like that, has been increasing since 2000 and, call it 2015. It's projected to increase all the way to 2020 when this graph ends, but small increases. And then they go where Europe currently gets its gas, and they have a nice bar graph here, and the bar graph says that approximately 10% is from other imports. Approximately 20% is, 15 to 18%, call it, is LNG imports, and that means liquefied natural gas. And then 30% is local supply, and then the other 27%, call it, is Russian pipeline, which would be the Nord Stream 2 that Biden canceled and so on. But if you read the article, it was a stock article, like I say, and they say that European-wide, gets about 40% of European gas imports come from Russia. All right, so the only way that matches with that chart is this nice little portion up here that says LNG imports, which is liquefied natural gas imports. Those are also from Russia. So all the European liquefied natural gas and all their piped natural gas, the actual gas itself originates in Russia. And if Biden were to cause a disruption in the gas supply to Europe, all of it, the Europeans would be faced with a choice of keeping the homes heated, residential and other heating like that, hospitals, small things like that, through winter, or shutting down the economy totally, And so it, makes me wonder, when you talk tough like that and suggest something that's entirely impractical. That's why the German, what did they say here? In a joint appearance after meeting the Chancellor Olaf Scholz of Germany at the White House on Monday, Mr. Biden said that he is confident that the pipeline would be put on hold in the event of a Russian attack, with the German Chancellor offering support, but without explicitly saying that the project would be halted. In other words, according to the reality, there's no way that we can do that. You talk tough all you want, and that's how it'll be. And like I say, it's getting hard to find valid numbers. Stock market is a little better. Speaking of valid numbers, what was it, 3 episodes ago, I talked about how the insurers, the group life insurance companies, on an advance report from America One, I think it was, said that deaths in working age people on group life insurance policies, non-COVID, on the death certificates, were up a large percentage. It's earnings season, and we got reports this week from Unum and Lincoln National and Prudential and the Reinsurance Group of America and the Hartford, and their increase in working age employed group life insurance deaths were 36%, and this is year over year, 36%, 47%, 41%, 31%, 32%. So everybody showing deviations more than 30%. The advanced thing out of America One was at 40%, which is below Lincoln National at 47%. Funeral homes are typically private, but the one that a couple of them are public, and one of them that was public reported, and their business in terms of net cremation and burial services for that age group are up 18%, and that's all we have. And some interesting things. Supreme Court Justice Breyer said he's going to resign, and Chuck Schumer came to the floor of the Senate or in front of the press corps, I don't know which, and he was talking about how it's important to get diversity onto the Supreme Court. And he said that he declared that until 1981, the Supreme Court was all white men, is what he said. And somebody had to point out to the old guy that Thurgood Marshall happened to be African American, and he was nominated by Lyndon Baines Johnson and confirmed to the Senate in 1967, where he served on the Supreme Court until 1991 before retiring. And Mr. Schumer's quote about how the Supreme Court was all white men until the election of Clarence Thomas in 1981 was obviously in error. But again, no correction that I've seen. Mayor of Los Angeles, a guy by the name of Eric Garcetti, was caught at some kind of a basketball game or a football game in a suite with no mask on, with Magic Johnson and all these other stars, and he's in this box suite watching the game without any mask and that kind of thing. And they asked him about that. Why do you have all the K through 12 students wearing masks 24, all the time they're in school? And he was asked about that. And the guy actually said that he held his breath when those pictures were taken. No, he actually, like Bill Clinton, I didn't inhale, right? And that passes for an explanation. In other little tidbits from earnings this last week, Clorox and Hershey and Procter & Gamble and Kimberly-Clark and Colgate all reneged on their promise not to pass prices on to consumers, and said that starting next quarter, in light of the fourth quarter results, they were going to be more aggressive in passing costs on to consumers for whatever it is they make, Clorox and Hershey and P&G and Kimberly-Clark and Colgate. So laundry detergent, garbage bags, sponges, stuff, cleaning supplies, things of that nature. And that's the world we live in. The market's a little more accurate because, like I say, you can get your life insurance numbers because when they make a payment, they have to report it. Yeah. So if you could put up graph number 2, look at where we are in the markets here. And this is just a chart from September 30th, 2021 through February 7th. Goes through yesterday, which was Monday, February 7th. S&P as of yesterday was 44. What is that number? 44.84. Well below the 50 DMA at 46.15, well below the 100 DMA at 45.70, and roughly 30 points above the 200 DMA at 44.46. It hit a cycle low on January 27th, 2022 at 43.27. The previous cycle low was all the way back on October 4th at 4,300. So that seems pretty firm. We have the 2 channels, the one that it was up in prior all the way until September of 2021 from March of 2020. That's those 2 gray lines. And then they moved it to a lower channel, or we speculated, but they can't hold it there either. as you can see, it dropped, and then they had to, they're supporting 4,300 is what it looks like, but it keeps going up and down, up and down. Today, as we're sitting here, it is 45.15.25, and so that's up, whatever that is, 31 points, 30 points from 44.84, which is where it closed yesterday. And what is that in percent? It's about 0.7%. So it goes up and down by 1% a day. At a new level of around 4,500, we'll look at it. You can take that graph down. If we go to last week, the week ended February 2nd, 2022, and look at the markets. They closed at 4,553, so 4,500 points exactly, roughly. And they were up 69 points for the week, which is about 1.55%. And if you have a $100,000 portfolio, you should have returned 1,550. And we have three demonstration portfolios left, all the largest stocks, top 30 stocks out of the S&P, one portfolio cap weighted, one equal weighted, and then we went all 11 sectors in the S&P and took the top 3 stocks from each. And the top 30 cap weight went up 1,685 compared to the projected of 1,550, so a little bit above it. Top 30 equal weight underperformed, only went up 1,100 instead of 1,550. And the top 3 every sector returned 1,550 on a projected return of 1,550. So if you want to do as well as the S&P, last week at least, holding either the very largest stocks or a broader portfolio of all the largest stocks out of all 11 sectors, you did fine. If you held just the top 30, you outperformed by whatever that is. It's 15% for a week, but you went up. Your portfolio rose 1.7% compared to 1.6%. So if you just held the top 30 stocks, that's important because when the Fed supports the market, historically, that's what they did. Is it's easier, you use less money, and it's less obvious when you just support the largest stocks. And if we look at the 54 stocks that we track, all those my portfolio, I used to have a discretionary portfolio, but it was hedged, and I let them call all the stock away from me on January 21st, so it's just sitting there with $115,000 cash in it, which we'll reinvest at some point, but not just yet. And if we look at the 54 stocks, it was bifurcated, but 8 stocks went up more than 6%. And again, these are the largest stocks, up more than 6% in a week, right? The volatility is fabulous. Almost all of these are on earnings reports. NVIDIA went up 6.7. Netflix went up 6.7 after falling 25% last week on earnings, so recovered 7% of the 25 that it lost. Google went up 7.5% just on earnings. No significant retreats in that stock. By all historical measures, it's, to be polite, fully valued. ExxonMobil, increase in the price of oil, went up 8 and earnings went up 8.1%. Boeing Aircraft went up 8.3%. Just continuing hope that they'll get a plane in the air. It's still, it used to trade at 320 and it closed last week at 205. So it's down 30% on not being able to get a plane in the air over the last, call it 2 years or year and a half. But Tesla went up 9.1% after crashing, whatever it was, 15% last week. Amazon on decent earnings went up 9.5% last week. And UPS on good earnings, good package volume, good execution, low expenses went up 13.4%. And that kind of, if you look at standard valuations that we used to use, like price earnings ratio, that makes UPS a little closer to these high-flying stocks like Amazon and Tesla And, Boeing Aircraft, for that matter, they haven't had any earnings in 2 years because they can't sell an aircraft, but forget all that. The stock value is all that matters, right? And 3 stocks went up more than 5, but less than 6, and those were Costco and Broadcom and Bank America. And then 3 stocks went up more than 4, but less than 5, and that JPM and Chevron are the only names in there. 3 stocks went up more than 3, but less than 4. And United Health and Abbott Laboratories, your 2 health concerns, went up in that group. 2 stocks went up more than 2, but less than 3, ConocoPhillips and Disney. Then you had 3 stocks that went up, but less than 2%. Apple and Walmart were in that group. And then 8 stocks that went up, but less than 1%. Verizon, Berkshire Hathaway, Procter & Gamble, Intel Corporation, Coca-Cola, Visa, and Philip Morris. And then 11 stocks that went down, but down less than 1%. And in there you have MasterCard, Johnson & Johnson, Nike, Southern Energy, which is a railroad concern, Microsoft, Comcast, Cisco, and Adobe all fell less than 1%. And then 4 stocks that went down more than 1%, but less than 2. And there you had 3M and Target and Home Depot. And 3 stocks that fell more than 2%, but less than 3%, and that would be Sherwin-Williams, Pfizer, and Lowe's stores, And then you had 4 stocks that fell more than 4%. The last category was stocks that fell more than 2 but less than 3. There were no stocks that fell more than 3 but less than 4. But you had 4 stocks that fell more than 4% but less than 6. All right, and AT&T, they cut the dividend, right? AT&T announced that they were going to reduce their dividend, and their stock is down 4.5%, which is approximately the current value of the dividend reduction. Honeywell, just on earnings, went down 4.2%. A real estate concern and a small materials supplier, Lynn Corporation, went down 5.4%. And then 2 stocks that fell more than 20% last week alone, and those are Facebook and PayPal. Both on earnings. Facebook showed its first ever decrease in users and announced increased expenses to create their metaverse. And they changed their name to Meta. Depends what you think of that, if it's going to be popular or not. They obviously think they have to do something because their the net number of users decreased. And PayPal, we've spoken before about them. My particular opinion is they're ill-managed. But their reports, when they did their financial reporting, it was somewhat shocking to the people who think that they're well managed, and their stock fell 21.5%. And this is all in a week on very major companies, very large. Facebook, I think, is the 5th largest company in the S&P 500. Market value has to be above 500 billion, but less than $1 trillion. It's probably closer to 900 billion, something like that. No, it was, so now it's 900 less 21.4%. So, which is a huge move. Very unpredictable. The numbers are juked. The reporting in your mainstream platforms are juked. And makes things very difficult. And that's, you can't really go into it, like I say, your community discussion standards, but a lot of things happening. It should sort itself out by, call it May. How it'll sort itself out is open to debate. But, it's like, who are you going to believe, me or your lying eyes, right? The president's press secretary is going to get on there and tell you that inflation's not a problem. And you're going to go to the store to buy anything made by Clorox, Hershey, Procter & Gamble, Kimberly-Clark, Colgate, Mandalo Company, just all the groups came out. I only listed a few of the major American names. And you're going to be paying more. So it's going to be, who are you going to believe, me or your lying eyes? One of those situations by probably May. And we have elections in November, and we'll see how it all works itself out or doesn't. My view is, if you leave these people who have been there for decades, who have learned to rely on money printing in power, you're just digging yourself in deeper. But that's just my personal opinion. And this has been the Bogdanich Perspective, and it's Tuesday. And thank you for joining. And it's always Tuesday for me. TalkcastPDX on the web at talkcastPDX.com. If you want to send me an email and have me discuss something or look at something, it's Paul@StockBettor, Paul@StockBettor, BETTOR.com. And do widzenia. And that means goodbye. Till next week, of course.